Hey guys, today I want to go over how to start investing in the stock market as a beginner. Before we do get into it though, if you wouldn't mind hitting that like button, clicking subscribe, hit that notification bell so you don't miss any of my new content. I post new videos every Monday, Wednesday, and Friday. But first I want to go over what is a stock. So a stock represents a fractional portion of a corporation based off of the total number of shares that are out there in the market. So for instance, a company like Apple, if you go ahead and buy one of their shares, doesn't mean you are a big shareholder. You own a small portion of the company and you are able to trade the stock, but it's not like you're making executive decisions or anything like that. You are just a small owner in Apple. Next, I want to go over what a mutual fund is. The difference between a mutual fund and a stock is that a mutual fund usually has multiple companies within it that are managed and diversified. Some examples of a mutual fund would be something like the S&P 500 or Vanguard. If you want to start investing in the stock market, you have two different options. You can either manage your own portfolio by signing up for one of these platforms, or you can hire a professional and they will manage over all your stocks. They will give you recommendations on what you need to invest in, or you can even just have them manage your money and do all that for you. The next step would be to pick what platform you would like to use. There are a bunch of different platforms out there that you can use, but some of them are Webull or Robinhood. I did a video on them with more in-depth detail. Some of the other platforms out there are TD Ameritrade or E-Trade. Most of these platforms are pretty easy to get started with. All you have to do is really just give them your social security number or driver's license, and within setting up the account, you're pretty much ready to start trading. And some of those platforms do offer incentives if you sign up. Some are referral links and some are just free stocks in general when you sign up. And if you want to support me as a creator, there is a Webull referral link in the description below. If you sign up and deposit $100, you'll get a free stock. Now I want to get into how you can start investing with those platforms. The next step you would take is when you create one of these accounts, you want to pick if you want to either have a margin account or a cash account. The difference between a margin account and a cash account is that a margin account lets you borrow money against your own securities and the broker is lending you that money. With a cash account, all the cash in hand that you have in your account is accessible to you, but if you make a trade and use up all that money, it's going to take time for that money to settle, for you to use it again. Whereas a margin account, you can pretty much make trades whenever you want, but sometimes you are subject to the PDT rule. What the PDT rule is, the pattern day trading rule. It pretty much subjects anyone that has under $25,000 in their margin account. What the rule involves is that you cannot make 3 trades within a 5-day rolling period of trading days. So what is a day trade? What it means is that if you buy a stock one day and sell it the same day, that's considered a day trade. Now, if you happen to buy that stock on a Monday and you sell it on a Tuesday, it does not count as a day trade. So there are different workarounds that you can do to get around the PDT rule, and that would be one of them. Another is that if you are above a $25,000 limit on your account, that means that you are not subject to any of the PDT rule and you can make unlimited day trades. So now that you got your account all set up, I want to get into how you can start investing with that money. So starting off with the basics, if you want to start getting invested in a stock, first you want to do all the research you can on that stock. Now I already went over the definition with you of what a stock is, but if you want to invest in a stock, you can buy as many shares as you can afford into that stock. All you have to do is buy them at a price that they are at. So there are different order types that you can use when you buy a stock. I'm not going to go over all of them, but the basics are there is something called a limit order. That means that you don't want to pay the current market price, so you'll set a limit. If it hits that price, it'll purchase those shares for you. The next would be a market order, and that is whatever the market price that is currently trading at for that stock will purchase those amount of shares that you allocated. Now once you own that stock, you are able to trade it whenever you want. You can buy more if you want, or you can sell it. It's totally up to you. So before you start buying and selling stocks, do know that there are things called short-term gains and long-term gains. The difference between them is that if you buy a stock and you hold it for a year and one day, it will be considered a long-term investment and you will be taxed less on those gains that you make. Now if you don't hold it for that time period, you'll be subject to higher taxes on those gains you make from the stock. So the next part of buying a stock is that some stocks do offer dividends. So what a dividend is that a company will offer every quarter a kind of reward for holding their stock. So if you hold a stock, they'll give you a dividend. They aren't always worth a lot, so do your research on when you buy a stock, how much their dividend payout is. It can be a nice little extra bonus of buying a stock. Do make sure that you do your research on those dividend stocks though, as some of the dividend yields can be very high, which can mean there are more risk and be subject to cutting the dividend. And one of the last things you could do when you want to invest is options trading. When you get into options trading, it can be a very, very risky investment. So do your research. Is super important. So if you want to get into options trading, pretty much what happens is that you buy a contract of a company, and what that means is that you have the option to buy 100 shares of that stock. But the limit to buying that contract is that you have to buy that contract at a certain strike price that expires at a certain date. And by that date, if your stock price is not above that strike price, it is considered out of the money. If that stock price is above that strike price, that means you are in the money and you will be making money on that. So before you even buy the option, there is something called a premium. That is the premium in which you are buying to have the right to even buy those 100 shares at that stock price. So on top of being able to buy that stock at that current strike price, you have to pay that premium on top of it. So what that means is that you can buy a contract at a certain premium, and then in a later date, you can sell that premium either for a higher price, or you can sell it back at the current price it's valued at now or less. It just depends on where the stock price is, because the premium will continually move with the stock price. So some tips I want to leave you with is that really make sure you do your research before you start investing in anything, because it is your money and you can lose it all. So before you even consider starting to invest, make sure you have some money allocated towards it. Make sure it's not completely all of your savings. Just start out with a small amount. If you aren't comfortable trading your own money at first, there are some platforms that do offer paper trading. What paper trading is that it's real-time data that is simulated for you to use with fake money so that you can keep practicing and getting better with the market. I would 100% recommend that you start with this anyway, as if you are a new investor, it's better to use fake money than your real money and lose that. Thanks for watching, guys, and if you haven't already, make sure you hit that like button, click subscribe, hit that notification bell. I have new content coming out every Monday, Wednesday, and Friday. Also, don't forget I do have a monthly giveaway. If you want to know more information about it, just check the details in the description below.